Property tax sales. This is not legal advice. The information presented here is for entertainment purposes only. You should not rely on, take, or fail to take any action based on this information. Never disregard or delay in seeking professional legal advice based on something you've heard or seen here. This information is specific to Georgia and the United States. Every state handles their own property tax laws, and those laws can vary widely. Laws change frequently. Do not rely on any information here. Always do your own due diligence. This presentation is intended to offer a simple explanation of the Georgia property tax sale process so that victims of the sale might get some idea of what to expect. Taxes, legal, real estate, and probate issues can be complicated and impossible to predict. Even the professionals might have a hard time helping with some circumstances. Everything contained herein is generalization based on the understanding of legal code cited in a Google search and provided in the links at the end. What to expect if you are behind. Additional fees, penalties, and interest will cause the bill to increase. A letter will be sent to the last known address of the property owner. An advertisement of the sale in the local legal organ, normally your newspaper. Online advertisement on the Georgia Public Notice website, which will also be at the end. Possible calls and drive-by views from those interested in the sale. Some interested people will even approach the property to discuss. Know the value of your property before agreeing to anything. What are your options? Educate yourself. It is basically free to do with the internet. Discuss the problem with trusted friends and family. Maybe someone you already know can help save your property. Call your favorite real estate agent and ask if they can help you with a quick sale. Sell all or part of your property. Wait and see what happens, but that's not recommended. What happens when your property gets auctioned for taxes? The tax commissioner or their representative will auction the properties and accept the highest bidders. The buyer pays the bid and the tax lien deed is recorded. The taxes and fees are paid and any excess is recorded. Now the clock is really ticking for 1 year. What happens after the tax lien is sold? The tax lien purchaser cannot take immediate possession. Any and all other liens against the property still remain. Other lien holders can also still foreclose for their interest. The original owner can still enjoy, sell, or legally transfer their interest, subject to liens outstanding. They can also redeem their interest, hopefully within the first year. Now more than ever, you need to get help. Selling will be more complicated, and remember, the clock is ticking. The tax lien purchaser must wait 1 year, but after that, they can move forward in taking full possession. The right to redeem or redemption rights. After the 1 year anniversary of the tax sale, the lien purchaser can advertise notice of foreclosure of right to redeem and without intervention, become the sole owner of the property and begin eviction. Other lien holders may have the right to redeem the property. Think about mortgage companies, the IRS, contractors. How do you redeem? If you're able to redeem the property within the first year, the price is 100% of what the purchaser paid plus 20%, no matter when within the first year. So, if your original tax bill was $2,000, but the purchaser paid $5,000, properties are often bid higher than the tax debt. Now you must pay $6,000 to redeem, plus allowable additional costs to the lien purchaser, like new taxes paid before your redemption of the property. after the year is up. The tax lien purchaser can advertise foreclosure of right to redeem. Now the additional amount to redeem the property is 30%, 20 for the first year and 10 for each additional year or any portion. So if you wait until you get the notice of foreclosure of right to redeem, the first year has passed. What might have been a $2,000 tax bill will now cost $6,500. What about the overage that was paid? Remember in our example, the $2,000 lien sold for $5,000. Normally, the excess funds or the overage are held by the county, even though the rightful owner of the extra $3,000 is probably the original property owner or their heirs. The rightful owner must request the excess funds from the county using a form available on their website. $6,000 to redeem minus $3,000 in excess funds would mean $3,000 that you'd need to bring to redeem within the first year. Some other ideas. If you're living in the property and want to stay there, try calling the tax lien purchaser and offering to stay on as a tenant if you can. During the year that you have available before the possibility of foreclosure of right to redeem, sell. There's no reason you cannot sell as normal. You pay off the tax lien holder at the sale. Consider selling your interest in the property to someone who will redeem it from the tax lien purchaser. Lien purchasers often pay well below the value of the property, and someone might pay you more. There are the promised links, and I wish you the best.